When it comes to altcoins, you must be selective. So, which altcoin do you pick?
Which one?
You can pick.
For many, the answer has been Chainlink, and those that picked Link have been pretty happy recently. And that's because Link has been powering higher even while the rest of the crypto market has slumped, and it appears to be on the brink of an even bigger breakout.
Maybe even bigger.
So today, we're going to bring you up to speed on what's been going on with Chainlink, analyze Link's price action, and figure out where this crypto project is headed next. My name is Nick. Stay tuned. First things first, you need to know that I am not a financial advisor and nothing in this video should be considered financial or investment advice. It's purely intended to inform you about Chainlink. Also, do note that nobody at the Coin Bureau team currently holds Link in their portfolio. But if you want to know which cryptos we do hold, then become a member of the Coin Bureau Club. That's where we do deep dives into promising small cap altcoins every single week, share crypto market alpha every day, and discuss price swings in real time with our members. In the coming weeks, we'll be upgrading the club and adding additional features that existing members will be getting for free. So, be sure to become a member ASAP to lock in the OG members rate using the link down below. Now, believe it or not, but it's been over 3.5 years since we last did a review of Chainlink. That said, we did do a Chainlink versus Pyth video late last year. So if you're unfamiliar with Chainlink's history, what it is, how it works, and how it compares to other crypto oracles, then check out our Chainlink versus Pyth video using the link down below. For everyone else, let's start from where we left off, December 2021. Obviously, a lot has happened since then, so we'll stick to the most important updates for the sake of time. To refresh your memory, Link had underperformed in the second leg of the 2021 bull market, and we highlighted the possibility that this was due to Chainlink selling lots of Link to fund development. Funnily enough, Chainlink announced a long list of grants in early 2022, underscoring this possibility. Not only that, but Chainlink Labs even launched a Web3 startup initiative in March 2022. Again, chances are that these grants were funded using proceeds from selling Link, given that Chainlink had raised $32 million way back in 2017. And there is a huge silver lining though, and that's that Chainlink's investments in its own development and ecosystem have paid off massively, exactly as we predicted. By the end of 2022, Chainlink was rolling out programs that would basically leverage its development and ecosystem growth to drive more value to the Link token as part of its Economics 2.0 roadmap released in early 2021. Of course, one of these programs was staking, with the first version going live in December 2022. The second version launched in late 2023, with more versions expected soon. Now, whereas 2022 focused primarily on investment and laying the foundations for future growth, 2023 was focused on the growth itself, with Chainlink launching multiple groundbreaking products. And the first of these was the Cross-Chain Interoperability Protocol, or CCIP, which launched in July 2023. As the name would suggest, CCIP essentially makes it possible to transfer assets between both public and private chains. As far as we can tell, CCIP has been one of the primary focuses for Chainlink ever since, with multiple upgrades and optimizations being rolled out over the years. And this makes sense when you consider that CCIP has been one of the biggest drivers of revenue growth for the project since 2023. Data from Dune Analytics suggest that CCIP has generated nearly $2 million in fees in about 2 years. Now, for context, Chainlink's total fee revenue over the last 2 years has been around $5 million according to DeFi Llama. Logically, another large chunk of this revenue has come from Chainlink's data services, which have been in high demand ever since Chainlink launched data streams in October 2023. Now, without getting too technical, data streams are faster and more cost-efficient ways of delivering data to blockchains. And notably, data streams appear to be more compatible with non-EVM chains, which has made it possible for Chainlink to compete with and take market share from the likes of Pyth Network. It has also made it possible for Chainlink to offer low-latency data for TradFi assets like stocks, for example. As you may have heard, Chainlink recently added support for exactly these kinds of assets as part of its tokenized RWA push. Now, if you watched our previous review, you might recall that we underscored the fact that Chainlink had effectively taken as much market share as it realistically could in the crypto industry. In other words, it had already been integrated with almost every crypto project and protocol that existed. And this meant that Chainlink's next frontier for growth would have to be off-chain adoption. Well, Chainlink doubled down on off-chain adoption in 2024, and this meant partnering with TradFi institutions like the Depository Trust and Clearing Corporation, or DTCC, where Chainlink helped trial the settlement of tokenized RWAs. Chainlink also started launching upgrades to facilitate these integrations, such as private transactions. Now, for reference, most TradFi institutions do not like it when their transactions are publicly viewable, as is currently the case on most crypto blockchains. They want transactions to be private with the option to reveal details for compliance purposes. And these are precisely the kinds of products Chainlink has been rolling out in the last couple of years, hence the flurry of institutional trials and partnerships. The most significant of these partnerships was arguably with World Liberty Financial, the DeFi protocol being rolled out by the Trump family. Chainlink partnered with World Liberty in November, and World Liberty subsequently purchased Link tokens as part of its crypto reserves. Oddly enough, though, World Liberty no longer holds Link, at least according to data from Arkham Intelligence. In any case, the key takeaway is that Chainlink has been partnering with institutions at an accelerating rate, and not just in TradFi. Over the last year or so, Chainlink has started cozying up to governments and central banks, helping them trial central bank digital currencies, or CBDCs, as well as other tokenized assets. In fact, Chainlink's involvement with governments and central banks has resulted in many in the community arguing that Link is the true banker coin. Note, banker coins was once a derogatory term used to describe cryptos like XRP due to their close connections to banks. Today, a banker coin is a more positive term that reflects serious institutional adoption. And this might have something to do with the fact that many crypto companies have also started going the TradFi route. And one example is Coinbase, which has not so subtly been trying to eat into the market share of TradFi exchanges by integrating tokenized assets like stocks and bonds. As you might have guessed, Chainlink has been helping Coinbase to do this since December 2024. But back to XRP. It goes without saying that Link isn't an XRP competitor, though some would beg to differ. Regardless, the fact is that Chainlink is working with XRP, not competing with it, and this was made clear when Chainlink announced it would help Ripple power its RLUSD stablecoin, which exists on the XRP ledger and Ethereum. Do note that proof of stablecoin reserves has been another focus of Chainlink. Now, one Chainlink headline that everyone seems to have missed was Tuttle Capital filing for the first spot Chainlink ETF in January 2025. Now, the SEC typically takes around 240 days to make a final decision on spot ETFs. So, the latest the decision could come for a spot Chainlink ETF is sometime this autumn. Note that there are already Chainlink ETPs listed elsewhere, such as in Europe. March 2025 was even more bullish for Chainlink, and that's for two reasons. First, co-founder Sergey Nazarov participated in the White House's crypto summit. He was literally in the same room as Trump and other top officials in the administration, and had the chance to speak with them for hours. And this suggests that Chainlink is playing a role in shaping crypto policy. The second reason why March was bullish was because of the launch of Chainlink Payment Abstraction. And this makes it possible to automatically convert the revenue from Chainlink's various products into Link, whether the user is paying in fiat or a completely different cryptocurrency. And the Payment Abstraction upgrade was a precursor to an even more bullish upgrade, the Chainlink Reserve. And this was announced earlier this month, and it uses a portion of Chainlink's protocol revenue to buy Link tokens. According to the Chainlink Reserve website, over 100,000 Link worth almost $3 million has been acquired so far. And you'll remember that Chainlink's protocol revenue has been going up and to the right. And this foreshadows more big buys. And this brings me to the moment you've all been waiting for, and that's Link's price action. As mentioned in the introduction, Link has been on a tear over the last few weeks, and at the time of shooting, it's on the brink of a breakout. Specifically, Link is struggling to break above a key resistance level at around $25. If it does, then the next level to watch is $35, where Link has lots of resistance from 2021. Zooming out, though, reveals that Link has been painting a massive cup and handle pattern over the years, similar to ETH. And you should know that this is not a coincidence. Link is one of the top blue-chip altcoins on Ethereum. As such, this means Link is likely to follow ETH with a higher beta. In plain English, it means that Link is likely to follow ETH with more volatility to both the upside and the downside. Well, ETH's chart is looking even more bullish than Link's. It suggests that ETH could soon hit a new high somewhere in the low 5K range. If this happens, then chances are that Link would follow suit, and again, $35 would be the next zone of resistance to watch. After that, it would be Link's own all-time high of around $50. There's just one caveat though, and that's Link's market cap. For perspective, Link's circulating supply was around 470 million when we last covered Chainlink in December 2021. Today, that number is closer to 680 million. And that means that Link's circulating supply has grown by over 210 million since 2021. Data from Tokenomists suggests these unlocks have accelerated in recent years. The good news is that this increase in Link's supply is likely being used to fund Chainlink's development and continued ecosystem expansion. The bad news is that these unlocks could be a headwind for Link's price in the coming months. However, a lot of these supply-side headwinds could be offset by the Chainlink Reserve, which you'll recall launched less than a month ago and is already growing fast. Even so, Link's supply growth means that we can't just look at it through the lens of price. We also need to look at it through the lens of market cap. As you can see, Link's market cap is also on the brink of breaking out, which is a bullish sign. However, it also suggests that Link's all-time high could be closer than meets the eye. If Link's market cap tops around 30 billion, that would mean a Link top of $40. The catch is that technical analysis doesn't factor in things like, say, a recently launched strategic reserve that's constantly accumulating Link, or a spot Chainlink ETF being approved in the next couple of months. Never mind the fact that Chainlink's partnership with World Liberty Financial is likely to put Link on the radar of many investors in case all the other TradFi partnerships didn't already. Given the circumstances, we reckon that a reasonable expectation for how big Link could get this cycle is somewhere around $70, and this would take Link slightly above its previous all-time high in fiat terms and significantly above it in market cap terms, and result in lots of profits, at least for anyone who sells. On that note, if you're trading Link, then you absolutely have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click one of the Sign Up Now buttons. Now, these deals, they won't be around for long, so take advantage of them ASAP while you can using the link down below or by scanning this QR code. Back to Chainlink. Now, whether Link could rally to $70 and beyond ultimately depends on its upcoming milestones. These can all be found in presentations by Sergey. Back in January, he did a presentation titled, quote, Chainlink in 2025, the final stage of blockchain adoption is underway. It can be summarized in one sentence. Crypto has essentially grown as big as it can without integrations with TradFi and governments. In a May presentation, Sergey specified that he doesn't see crypto's market cap growing any bigger than $7 or $10 trillion without such integrations, and he's probably right. Naturally, he sees Chainlink as being one of the protocols that powers this unified on-chain future of public chains, private chains, and government chains, all with their own unique assets and requirements. To help fit this massive, complex, multi-chain ecosystem under one umbrella, Chainlink is hyper-focused on two aspects of its protocol: programmable interoperability via the Chainlink Runtime Environment, or CRE, and programmable compliance via the Automated Compliance Engine, or ACE. Both products have launched but are still in the early stages, with full launches reportedly expected later this year. The specifics of the CRE and ACE are outside the scope of this video, but the CRE can be simply understood as a layer that can interact with any asset on any blockchain, whether it's private or permissioned. In turn, the ACE is another layer that exists on top of the CRE, which makes sure that the assets on these chains are being moved in accordance with whatever regulations are required. For instance, suppose someone wanted to move USDC from an instance of Aave on a public blockchain like Ethereum to an instance of Aave on a private permissioned one like JP Morgan's Connexus. The CRE would interact with the necessary smart contracts on Ethereum and Connexus to move that USDC, and the ACE would ensure that the USDC is coming from a user who has completed KYC on the Ethereum wallet. We know it's a bit more complicated than that, but this is a very simple example just to help everyone understand. The key takeaway, though, is that Chainlink wants to build the infrastructure required to make it possible for crypto to merge with the existing financial system so it can continue growing. And this will require very elaborate and complex interoperability and compliance solutions like the CRE and ACE. Again, we think Sergey is spot on with this thesis, but it paints a pretty grim picture for crypto's future. To be blunt, it suggests that most crypto projects will either fail or be acquired by their TradFi competitors, and most of the growth in what we know as crypto will happen in private and permissioned asset classes that are highly controlled, such as stablecoins, tokenized stocks, and tokenized real estate. Put differently, it suggests that we're going from a world of crypto to digital assets, and that's a world where crypto plays an increasingly less significant role. Chainlink is trying to ensure that it stays relevant in this apparently inevitable future, but there's no guarantee that it will. After all, what's stopping big tech and TradFi firms from launching their own CREs and ACEs? Why would they settle on using Chainlink? And this brings me to the challenges that we foresee for Chainlink. And the first challenge is, as I mentioned, competition, not from other crypto projects, but from fintech and TradFi firms. While Chainlink has been partnering with many of these institutions already, it's perhaps only a matter of time before one of them asks, hey, why don't we just build the CRE and ACE thing in-house? In theory, the answer is that they wouldn't, because this is bleeding-edge tech that's only been built on Chainlink. In practice, the answer could be yes, because of one basic fact. Institutions like TradFi, governments, and firms value control above all else. The idea of outsourcing this control to Chainlink seems unlikely unless Chainlink becomes captured by these powerful interests, which is possible. And this ties into Chainlink's second challenge, though, and that's funding. I'll repeat that Chainlink seems to be funding most of the development through sales of Link, and as you might have noticed, Link has a maximum supply of 1 billion, and it's creeping close to 700 million. Considering how much Chainlink has been building, it may only have a few years left of building at its current pace before it needs to scale back. Then again, the Chainlink reserve will likely extend the runway, and Chainlink is also likely to generate more revenue as it becomes more integrated with TradFi institutions and governments. Still, it's hard to see how Chainlink will be able to keep up its current pace of development indefinitely, particularly because fee allocation towards the Chainlink reserve could take funds away from development. And this relates to Chainlink's third challenge, and that's the assumption that the on-chain future the project envisions involves more than a few dozen monolithic chains. If we truly are heading for a borderline dystopian future where everything is tracked on a blockchain, then chances are that each country will have a handful of blockchains that provide most of the tokenized infrastructure. Smaller countries will probably adopt the blockchains of bigger countries instead of developing their own, which means we could end up with a system where 99% of on-chain transactions are processed by a dozen blockchains globally, kind of like what we see today in crypto. If that's the case, then Chainlink's key selling points becomes less apparent, especially if we're headed to a multipolar world. If Chainlink decides to align with the US pole, then it may struggle to get adoption with the Chinese pole, and vice versa. Speaking of which, it's worth noting that Chainlink recently participated in a CBDC trial with Hong Kong, and some would say that this is evidence that Chainlink is angling towards the Chinese pole, which is where most of the economic growth is likely to come in the next few decades. And that could spell trouble if Chainlink continues to be based in the US, but that's a rabbit hole for another time. All things considered, these are challenges that exist further out in the future. In the shorter term, Chainlink is stronger than ever, and Link is looking good here, as the crypto folks say. The launch of the Chainlink Reserve, Chainlink's involvement in the Trump administration, and the relentless stream of bullish news around partnerships and integrations continues to put Link on the radar, and its price is proof of that. So long as ETH continues rallying, Link is likely to continue being a top-performing altcoin, which is why we're going to be watching Chainlink very closely in the coming months. And if you want to make sure you don't miss an update on that front, then subscribe to the channel and ping that notification bell. And if you're wondering if your altcoin will ever recover, then be sure to check out our video on that right over here. That's all for me. Thank you guys very much for watching. I will see you in the next one. Over and out.